Eli Lilly. Right now, they're the undisputed king of pharma, printing money with their blockbuster weight loss drugs Mounjaro and Zepbound. Their stock has been on an absolute tear. So what do you do when you're on top of the world? You make a bet. A huge one. Lilly just dropped $1.3 billion to buy a tiny biotech company called Verve Therapeutics. And they didn't just buy it, they paid a shocking 113% premium for it. The market went wild. Verve's stock more than doubled overnight. But Lilly's stock barely moved. So what's going on here? Why would a $700 billion giant pay so much for a company most people have never heard of? The answer isn't just about a new drug. It's about a gamble to completely upend one of the biggest markets in medicine and potentially create a one-and-done cure for heart disease. Today, we're doing a full financial deep dive. We'll break down the deal, the revolutionary science, and what this means for investors in Lilly, Verve, and the entire biotech sector. Stick around, this is a big one. Alright, let's get into the numbers. The deal looks like this. Lilly is paying about $1 billion in cash up front. That's $10.50 for every share of Verve. But here's where it gets really smart. The other $300 million is tied to something called a CVR, or contingent value right. Think of it as a performance bonus. Verve shareholders only get that extra $3 per share if the company's lead drug, VERV-102, successfully starts a pivotal phase 3 trial in the US within the next 10 years. Why structure it this way? It's a masterclass in de-risking a high-stakes deal. Lilly gets the company and its technology now for $1 billion. But they only pay the full $1.3 billion if the science proves out and hits its most critical milestone. It caps their downside while keeping the Verve team laser-focused on hitting that goal. It's brilliant. So what is this technology that Lilly is betting the farm on? Verve's mission is to change the treatment of cardiovascular disease from a lifetime of taking daily pills or getting frequent injections, to a single, one-time treatment. A one-and-done cure. They do this using a next-generation technology called base editing. You've probably heard of CRISPR, which is like a pair of molecular scissors that cuts DNA. Base editing is more like a molecular pencil and eraser. It can change a single letter of the genetic code without making those risky cuts to the DNA. It's more precise, and many scientists believe it's safer. Verve is using this to permanently turn off the genes in the liver that produce bad cholesterol. Their lead drug, VERV-102, targets a gene called PCSK9. And the early results are why Lilly opened its checkbook. In a recent phase 1 trial, a single infusion of VERV-102 was well tolerated and lowered bad cholesterol by an average of 53%, with some patients seeing reductions as high as 69%. That's blockbuster-level efficacy from a single dose. Okay, so the science is cool. But why this? Why now? This move is a classic wealth-to-future pivot. Lilly is swimming in cash from Mounjaro and Zepbound. But they know that cash cow won't last forever. So, they're using today's profits to buy their future growth engines. This isn't a one-off. In the last year, they've also spent up to $1 billion on a non-opioid pain company and up to $2.5 billion on a precision cancer drug company. The Verve acquisition is the cornerstone of their new genetic medicine empire. They're not just buying a product, they're buying a platform that could one day treat diseases across all of their focus areas. They're using today's wealth to ensure they're still dominant in the 2040s. To understand how disruptive this is, you have to look at the current market. Right now, the best treatments for high cholesterol, besides statins, are injectable drugs called PCSK9 inhibitors. You've probably seen commercials for Amgen's Repatha. Repatha is a huge drug, doing over $2.2 billion in sales last year. These drugs work. But they have two massive flaws. They're expensive, and you have to inject yourself every 2 to 4 weeks, for the rest of your life. Unsurprisingly, patient adherence is terrible. Some studies show 40% of people just stop taking them. The next wave of competition is coming from companies like Merck, who are developing an oral, once-a-day pill that does the same thing. That's an improvement, for sure. But Verve's approach, the one Lilly just bought, aims to make all of that obsolete. Look at this. You have injectables every few weeks. Then you have pills every day. And then you have Verve, one infusion, one time. Why would you take a pill every single day for 30 years if a single treatment could solve the problem permanently? Lilly isn't betting on a better drug. They're betting on the end of chronic drugs for this disease. They are attacking the market's single biggest weakness, patient adherence. So what does Wall Street think? The reaction was split right down the middle, and it tells you everything you need to know about this deal. The bulls, analysts at firms like UBS and William Blair, love it. They call it a sensible bolt-on and a bargain. They see the long-term vision. They're valuing a revolution. The skeptics, like analysts at BMO Capital, are scratching their heads. They question the market need when oral pills are on the way. They're valuing an evolution. And that's the core of the investment thesis. An investment in Lilly today is a bet that the revolutionary view is correct. It's a high-risk, high-reward play on the future of medicine. So, what does this all mean for you as an investor? For Verve shareholders, this was a huge win, with a little more potential upside from that CVR. It's probably too late to jump in now hoping for more. For Eli Lilly investors, this deal reinforces the long-term bull case. It shows management is not resting on its laurels. They are aggressively using their current dominance to build the next pillars of growth. The risks are real, the science could still fail. But if it succeeds, this $1.3 billion acquisition will look like one of the shrewdest deals of the decade. Lilly isn't just playing the game, they're trying to change the rules entirely. What do you think? Is this a brilliant strategic move by Lilly or a reckless gamble? Let me know your thoughts in the comments below. And if you got value from this breakdown, make sure to hit that like button and subscribe for more deep dives into the deals shaping our markets. Thanks for watching.